Regarding the market, we remain constructive on Indian equities structurally, largely because our view is that global liquidity will be high and India's growth will be very strong in a relative sense. The reason to believe about global liquidity is that most advanced countries have very high level of government debt and they're facing poor demographics, which means real GDP growth will be limited. In that scenario, just like we've seen with Japan, we think most developed countries will run very low real rates. That is, the nominal interest rates will not cover inflation. Typically in that scenario, people move to risk assets like real estate and equities. So globally, first of all, we think that liquidity for equities will be quite strong. Coming to India, there is a remarkable convergence of India's macro with US, which we feel will play through the currency channel, which again will make Indian assets very attractive. We've seen that India's current account in particular has seen a fantastic improvement. Even in inflation, government debt, fiscal deficit kind of macroeconomic matrices, we are seeing that India and US are converging, and we think that will lead to relatively a strong performance of Indian currency versus its past, hence leading to re-rating of Indian assets. Coming to India, we think the sweet spot of India's growth is where the white collar workforce is working, which is your scientists, medical staff, engineers, etc. So the segments which employ this white collar workforce, whether it's engineering companies, pharma companies, specialty chem, defense, IT services, I think they're very strongly placed at a global level, and we do expect that a lot of outsourcing will come to India. The white collar workforce consumes a lot of goods and services, so those goods and services will also do well, whether it's urban real estate, affluent retail, aviation, hotels, etc. So we think that's a sweet spot. The other big theme we feel is moving from banks to capital markets as Indian people start saving more in financial products. So the listed capital market proxies in terms of AMCs, brokerages, depositories, I think that is another good theme to play.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.